The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 21st wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. If you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, we'll go look at the circumstance of the bulls and the bears, the buyers and the sellers. We'll go see what they're communicating to you and I just past 1 o'clock in the afternoon. And I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in anytime you want, 877-927-6648 internationally, 727-445-1044. Email steve@tfnn.com. Inside the Tiger's Den, you can ping me at any time you want, and we'll try to get to whatever it is that you're looking at on this wonderful Wednesday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 54 points. She's trading at 17,272. S&P's off 3 at 2027. NASDAQ Composite down 23 points at 48.57. The Russell's off 11 points at 11.51. The DAX closed up 91 points on the day. She closed at 10,238. The FTSE up 3 points at 63.48. Goldilocks back $11 right now, 11.66. If it closes underneath 11.68, that spells more retracement to come, which I believe is the case, even if it doesn't. But if it does close below 11.68, that would be its message out there. Silver down 20 cents at 15.71. Light sweet crude off $1.10, trading at 45.19. Leading the charge here to the upside, dollar-wise, we got Intuitive Surgical. That's up $31. Must be some earnings out there. KLA 10 core, I believe that's a buyout, so that's up 22%, a little premium out there. SolarWinds up $8. Lithia Motors up 6. Stepan Company, I guess it is, 5.5 up dollar up. How about that? Up 12%, about $5.50. Tupperware up about 9%. Chipotle on fire to the downside. Looks like 1.3 million shares. I believe that's volume to the downside in Chipotle, getting back below a breakout area. We'll take a look at that equity. Bailey and Pharmaceuticals looking ugly. That's down 32%, off $47. Allergan off $15. VMware down 14. So we've got a lot to start taking a look at. Let's first begin with take a look at what's really going on in the markets today, really our trading range area, if you will. I think the easiest way to show it is probably this chart right here. This is the 120-minute time frame. Now, what we want to do here during this next several minutes, right, if we take a look at what's going on inside the market, we got the Dow that is moving to the upside. Everything else is in red. So we need to really take a look at the strength and the weakness. But we'll do that. As we switch back over here to the 120-minute time frame, the 2-hour time frame, if we take a look at what has transpired thus far, and in the upper left-hand corner happens to be the NASDAQ. So this is NASDAQ. I'm going to go ahead and try to explode it just a tad for you. Let me move it down here. There we go. So now you can clearly see it. Now the white lines, the horizontal lines you see going across my screen, those are what are referred to as our TAS market profiles. They really become the levels of support and resistance that you and I can watch price bounce off of or go ahead and move through. One would be bullish, one would be bearish. So inside the NQ, we can see this morning, as just shortly after Ferrari's IPO went north, when it was released out there, we saw the NQ go ahead and move down basically to the bottom of that market profile. That bottom is 44.17. The actual low was 44.19. Hey, close enough in our work. But what we also saw was price bounced off of that moved higher. Now, it did not take out the highs. It did that during the previous session, which ended at 10 a.m., where it tested the high of that profile box, which is 44.53. And remember, you and I, we're more interested in the body of the candle than we are the wick or the shadows out there. Not that they don't have meaning, but you and I, the true essence of price is really going to be the body of the candle. Now, this 2-hour session that we're in doesn't complete until we get off the air at 2 o'clock. But the level to clearly be watching inside the NQ is going to be 44.17 is what we'll call it. If we see it close below that, that would suggest the NQ would be telling us, which it does have enough power to motor things down lower, that the market has cracked. That would be one message. Now let's take a look at the lower. In fact, let me just blow it up on my screen. It'll be a little bit easier. I'm going to go ahead and expand this so that we can take a look at this. This makes a little bit, that was probably too much of an expansion. Okay, now if we take a look at the real strength in the market, and we take a look at the daily time frame, not the daily, the 120-minute time frame here for the Dow futures, what you can see that they have done, in essence, consistently since about 4 o'clock this morning, between 4 and 6, as they are trading above their 120-minute profile. Now, as price was moving down this morning, 10:30, 11 o'clock, whatever it was, that time frame out here, when price was pulling back, notice how what the Dow futures did was they simply took the old resistance level, which had been tested before, and they said, not ready to go. Now, we're nowhere near that price point inside the Dow futures, which is 17,124. So what you want to see, bullish or bearish, doesn't matter which side. These are levels that can help you to, and of course it depends on the time frame that you're trading. Remember, we're just looking at 2-hour charts out here. But as we take a look at the 2-hour chart, the key area of support inside the Dow, and as long as it stays above 17,124, can those 30 stocks go ahead and pull the market higher? It's going to do everything that it possibly can. Likewise, if you were to see it close today, I doubt that you'll see it close. Now, I don't know if you will or you won't, but I doubt that you'll see it close below 17,055. You're at 17,183. It's not that can't happen. That's 125 points to the downside. If you did see it close below 17,055, that would be suggesting that what has been strong in the market just simply has given it up. But you want to also take a look at the resistance zone, 17,124, because if price comes back inside there, closes inside there, by the way, I don't just mean, ping that area. I mean close underneath it. Then that says you go down and you test that 17,055 level. Now, the real weakness inside the market is the Russell 2000. If we take a look at the Russell 2000, you can see on its 120-minute time frame, it's had no problem going ahead and closing below its bottom of that box, which is 1155. So it's below that. Didn't even on the bounce really come back and test that area. It got close, right? The 1155 area is the bottom of the box, and we saw the high 1154.90. So that's close enough, right? So in the case of the Russell 2000, she's already given the message. If we just take a look at retracements, let's do that. Let's go ahead and draw a retracement in here. And what I mean by retracement, we're just looking at the low of the session from 10 o'clock in the morning on the 15th. All the way to the high that was put in here yesterday at about 10 o'clock in the morning. You can see we're below the 0.382 retracement level, which is priced at 1153. That says that what the Russell 2000 futures contract has in store for us is a visit to the 1144 area. Wide-ranging bar, a little bit of a breakout there. It may hold that support at 1144. If it doesn't, then what it will do is likely not just run down to the 1138 level, which is your 0.786 retracement. Instead, what it's likely to do is move all the way back down to the bottom at 1130.50. That is inside the Russell 2000. What have we left off? Oh, we left off the ES Mini. Now, as we take a look at this, same pattern in essence with regard to market profiles as the NQ. And so what you can see at 115 right now, we're getting very close to testing the bottom of that support level. Now, notice here that as we take a look at the point of control, that's a little dotted line, and the very bottom horizontal white line, the bottom of the box, notice how those two are closer together. That says that this is the area where buyers should be lined up. So the ES Mini, during the show, it looks like, we're going to go ahead and test the 2019 level. Well, shoot, you're 2019.50. Like I needed to be a rocket scientist to be able to communicate that to you. But here is the key. If we see, now this is a 2-hour chart. So remember, during this next 45 minutes, it could ping it, it could get back up above it, just as it did here as we finish the 12 noon session, but really that ping and that test of that area, that took place, I don't remember the exact time, but it was, earlier this morning. If we see a close below this, we already know the Russell 2000 has rejected that area. We know that now as I go ahead and I pull this back here, we know that the NASDAQ as well as the ES is about to test that level. All three of those will go ahead and pull the Dow down. So breaking these, here's what the market has been doing. We've seen some pretty nice trading ranges, and we don't have anything at this stage of the game to tell us that it's anything more than a trading range, which is something you and I have gotten used to for the most part of 2015. So in essence, that's what's going on. That's about as intraday as you and I really need to get at this stage of the game. Okay, so now that we're there, let's move on to other things out here. What else do we want to move into? I'm just trying to. Let's talk about gold. So let's go take a look at gold. Try to knock these things out one at a time. So as we take a look at Goldilocks, put this up on our screen. Trade at 11.66, back $11 as we speak right now. Remember, I said 11.68 is a key number out here. All you got to do is just write that down on a pad of paper. You're at 11.6650 right now. Gold, more likely than not, wants to get down to 11.41. Your next real buy point in gold may come at about the 11.41 level. We know that gold has completed the 1-1-A to B equals C. Let's go ahead and get rid of that pattern right here. Let's go ahead and get rid of, looks like I've got a retracement out here. Let's go ahead and, before I delete those, you got 1146 is your 0.382 retracement. Trust me, getting down to 1141, 1146, finding support there and moving higher from there, that would be super bullish. Coming down to 1118, to the 1125 area and bouncing from there, that would be very bullish. So you got super bullish, you got very bullish out here, and then breaking through 1118, if in fact that's what it were to do, then all of a sudden we'd say, that run that we just had, that's over. You can go ahead and check that one off the list out here, and we'd have to try to figure out what next might be on the plate here for Goldilocks. But at this stage of the game, Stevie's opinion is if gold closes below 1168, that says we've got lower prices coming ahead of us, and it may only be down to the 1141 area. Notice how on the daily market profile, been around here, and let me go ahead and get rid of that retracement level, been around for the last 3 trading sessions out here. Notice how, just as you and I looked at inside, I believe it was the Dow futures contract. This is a daily, by the way, that we're looking at. Notice how you've got the point of control closer to the bottom of the box. So that's what, suggests the 1141, 1152 area inside of gold. Now, that's what's going on inside gold. Let's go take a look at silver out here. Silver, a little weaker than gold. It's off 21 cents out here. What is silver doing? Let's try to get our profiles. Now, silver made the 1-to-1.272 A to B equals CD. It's actually made a Gartley sell pattern. So we get back from this break. Let's go take a look at different outcomes of a Gartley sell. Silver right now down at the bottom of its daily TAS box. So maybe it's silver that'll give us an additional message as to what the metals want to do. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 21 right now. S&P is off 7 points. Before we went to that break, we were looking at the December silver contract. And what we were noticing here was that silver is right now priced at the bottom of its daily market profile. 1570 is a number here at 1571. So watch that 1570 area. That'd be another confirmation that there's a further pullback going on inside of the metals. Now, the cool thing here, we go take a look at the ETF structures. We'll do that. We'll take a look at SLV and GLD, is that this retracement of this pullback should be on light volume. Now, in the case of silver, you know, whenever you finish any kind of Gartley pattern, buy or sell, there's really 5 different outcomes. Outcome number 1 is just simply a dead cat bounce, a 0.382 retracement. That would say price should be able to get down to the 1533 level. Level number 2 would be your 0.618 area. That's at 1480. And, you know, that's certainly a possibility. That in the weekly profile, that is the point of control out there. We got to take things one thing at a time. The first thing is 1570 is where it needs to close below in order for prices to continue moving south. Let's go out to Ormond Beach, Florida, to Mike. Mike, thanks for calling. Thanks for holding. How are you doing today?
Great, Steve. I want to thank you again for all the great in-depth analysis and all the great teaching tools you provide for us. It's really good that you do that for us.
Well, my pleasure. Thanks so much for being there for us. If you guys weren't out there, there'd be no reason for us to do anything. So it's all about you. And today it's going to be all about you and Agnico Eagle, I believe. So tell us what you're doing. Tell us what you're doing. How I can help you.
I've been fortunate enough to get in and out of that quite a few times, and I'm looking to get back in, and I'm looking at the low 26s or the high 25s as an area to get back in. What do you think?
Well, the first level, Agnico Eagle, is very strong. I mean, it is a strong stock. It is probably one of the strongest out there. If you're looking to build a longer term position, I would say, and just use a wider stop because this is really all about position sizing out here. I would say you want to take a look at the 2736 level.
Okay.
As one possible spot. Now, the reason that I say that, as we look at their chart and we take advantage of the TAS market profiles, we can see that the point of control is closer to the bottom of the box. Now, in a really strong bull market, which AEM is in at this stage, so it's going to certainly need gold and silver to just pull back nicely out here, and that way this can stay strong. This can stay stronger. The 0.382 retracement level from low to high on this. Now, the low that I'm using out here is from September 11th. So the run from the September 11th bottom to the high out here on October 15th, the 0.382 retracement level is 2707. So, and there was a nice sign of strength inside AEM on October the 2nd. So that says to me that, assuming that gold is behaving properly, you don't have wide-ranging bars, coming down into this level, this might be an area where you'd want to take a look at getting into a new position here. The other spot, you were saying the 26s. So 26s are good. 2736 is good. 2591 is the weekly market profile. That's old resistance. That would actually be kind of like a gift, I believe. At this stage, with what you and I are looking at, that would be a nice gift to you. So if it got down to 2591, then I wouldn't think you would need to use as wide of a stop. You still need to make sure your stop is greater than the average daily movement inside this equity. But that's what I would be looking at. Now you were saying the 26s because there's something that you were looking at there. Was it the trading session from September 24th, or what are you looking at?
Well, it looked like it looked like to me that the 26 area was almost like ice, high resistance, and then when we broke through that, it to me looked like it was a support area.
Yeah, at 26, just the widest price spread, highest volume day from that September 11th low to the high in October here took place on September 24th, and that had 6.5 million shares, and the very top of that was 2587. So go ahead and take what you had concluded, add that to the scenario, and I think that 26 area should be a strong level of support. I don't know if it's going to make it all the way back there. That's really I'd like it to. I would love it to. But I think go ahead.
I agree that it is one of the stronger gold stocks, and sometimes it doesn't always pull back on a percentage basis as much as the others have been.
Yeah, exactly. Now, what it hasn't done here is it's got this huge trend line. So I can give you the bearish side is, and if you're watching my screen, I'll tell you what, Mike, do me a favor, just stay on through this break here. We'll come right back, take a look at the last element of AEM that each of us need to consider here. This is Steve Rhodes with TFNN. We'll be right back.
Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 12 points. S&P is off 8. We're on the line here with Mike from Ormond Beach, and Mike is looking to get into AEM, Agnico Eagle, one of the stronger mining equities out there. And as each of us take a look at a stock chart, the one thing we've always got to remember is we always should look up one level, down one level, just to see what's going on, above us in the clouds out here. And it really, when you do this, and the AEM is a perfect example, Mike, of the reason that we want to do that, is it helps us to really understand why price stopped where it does. And it also allows you and I to plan for, you're doing a great job of trying to plan for an entry, and we've taken a look at a couple areas for you to target. But of course, this stock could actually take off and say, hey, I don't care what Mike and Steve were talking about. It's got a mind of its own. Now, if this were to be able to clear its most recent high, 3069 out there, what it would actually be also doing, it would truly be breaking out above its descending trend line, as well as, in essence, its descending price channel. So the red line on my chart starts with the high, so we're using the actual wick of the candle from the week that began July 28, 2014. And then, in essence, the next touch point was its most recent high back in 2015 in May, which was priced out at the 3489. And interestingly enough, the actual high that we have seen thus far is where price really stopped. Now, that's just using the wick of the candle or the high, whatever, if you use a candle, if you use a bar. If we take a look at the body of the candles out here, you can see the yellow descending price channel that the price is traveling within. So the other side would be, I would not hesitate to go ahead and get into the position if somehow, some reason this takes off and breaks above that level. So do you see that as well? Now, to me, it makes more sense that we're going to see a pullback before we see another test of that area. But even on that pullback, and you buy, know that that's going to be a strong level of resistance that it has to break above.
Okay, great. Thanks a lot, Steve, for all your input. And see, what I do is I work during the day. In fact, I'm just taking my lunch break now. And a lot of times what I do is I look for these areas of where I think something can pull back to, and I select my little position sizes, and I put my buy limit orders in, so that way a lot of times they can kind of hit as I'm at work, because I can't be in front of the computer. And what I do is, like on the higher end of where I think one of the stops is going to be, I might position myself with maybe 1/3 of what I would buy, and then, have the other sell orders in all, down further. That way,
Sure.
If it does take off to the upside and my first area of support was the bottom, then I can, maybe hit it again. But it's difficult to trade that way, but it's the only thing.
No. Hey, look, I think it's great. And I think it's just what you and I want to do is just look at both sides of the trade. And I think you're absolutely doing the right thing, trying to identify, my subscribers and I, we were in this trade. We exited that trade and took our profits. And, I spent part of the morning looking at this and several other, there's about 9 different mining equities that have behaved really well. And so I'm just looking for the next point of entry inside these, as well as if it doesn't come back to those areas, I wouldn't hesitate in the case of Agnico Eagle to add to an actual breakout as well. I'd prefer not to, but I wouldn't hesitate to do it.
Right. I was always like that too. And one of the things that Basil always taught us was, don't be afraid to buy a stock that has good strength, even if it is going up,
Yeah, no question. And inside the mining complex, what is actually kind of neat about the mining complex, whereas the first move off of the bottom here in September has been nice, the ETF itself didn't participate much. Not that it didn't move, Nugget or any of the others out there, but those stocks that represent a significant portion of those holdings inside there, it looks to me on this next move that those ETFs ought to get some real traction out here. So
okay.
Some of the weak stocks are actually looking okay, but we'll just have to wait and see what happens. All right, my friend.
Okay, thanks.
Okay, thanks for calling. That was Mike in Ormond Beach, and we took a look at it. And as I say, folks, you go back and look. You can go to the website. You can get the holdings inside of the XAU, the HUI, the GDX. You can find them and go through each of those stocks. I would suggest that if you're going to go ahead and play, because as I say, I think this time around, the next move higher, assuming that there is a next move higher, I think that the ETFs and Nugget, GDX, they ought to do pretty well. But that doesn't mean that you could create your own basket of currencies of these 8 or 9 specifically that ought to do really well out there. So consider doing that. Okay, so you got the Dow basically almost back to the flat line right now. I'm just going to go back into that 120-minute time frame, even though so wow, we've got the ES Mini has clearly busted through support. The NASDAQ has clearly busted through support. We know that the Russell has. The Dow futures have come all the way back down to that level, that old resistance area that you and I want to keep an eye on, and that is the price point here of 17,055. So it's tested that. But coming into the 2 p.m. session out here, now it doesn't have to do it at 2 p.m., but that's when this bar itself ends. If it does close inside there, and I'm not talking by a buck or two. Let's say it closes, I don't know what the number is. We'll look at it towards 2 o'clock. But here's also, we're at an area where you could also see the market bounce from here, right? So you've come down to a level that held as support thus far this morning, and you could actually see, some type of a bounce unfold here. Where that would take us to, if we just look at a 10-minute chart here, we just go ahead and borrow from Tom and take a look at our 10-minute charts just to take a look at some volume patterns out here. Where could a bounce inside the ES take us to? Let's blow this up on our screen here. So we know that price right now is testing the bottom of its 240 minute. I would say the place where price would probably bounce to 2022 to 2023 out here, would be the spots to be looking for. That's just simply a quick glance out here from a volume perspective. Where could it really bounce to? It's just, to me, it's not really as clear from a volume standpoint. So in any event, just know that we've seen the the Dow futures, which are the strong dog out here. They're up against a level of potential support for the time being. If we go take a look at the summation index, we're also going to see that the NASDAQ here is getting very close to a level that could act as support. If we take a look at its price oscillator out here, let me just go ahead and turn off the bottom yellow line. That way it doesn't confuse you as much. Give me a moment to find that. Where is that? Is that this one? No, that was the one I wanted to keep on. So now it must be that one right there. Okay, so it makes it a little bit easy. So we're taking a look at the blue line out here. What we can see is it's priced just really above that zero line of the price oscillator. This is an area as well inside the composite where the real buying, if there's going to be any, ought to begin to take place. Doesn't mean at 142, but you want to watch that level. Now, if in fact we are to see a move when the price oscillator gets below zero, what that's going to suggest to me is that we ought to see the NASDAQ composite get down and test that gap that took place, that sign of strength on October 2nd. So it's really the gap here, which has only been tested once, which is the high of your first target becomes the October 2nd high, in my opinion, which is 47.07. It could be the low of October 5th, which would be 47.40. So that would really be your first range of support. Any close inside there, meaning below, assuming that it gets there, any close below 47.07, and that's going to open up at least a test for the September 29th area. Now, retracement-wise, just simply, let's go take a look at a retracement out here. A retracement just simply from the low here of September 29th to the high out here on October 19th, your 0.382 level, 47.51, your 0.618, 46.50. Again, just a normal move on any kind of retracement or pullback out there. Now, it's the NASDAQ composite at the moment that, as we take a look at price oscillators, is really the weakest of the group, that being the Dow, that being the New York Stock Exchange, the other two that we look at. But what you and I know, you and I have looked at this for days now, it's signaling to us that a retracement, something more than what we've seen thus far today. Doesn't mean it all has to happen today, but some type of retracement is due. And then just like Mike and I were just simply taking a look at levels of support inside of AEM, we want to do the same types of things inside of the market, potential levels of support. When those levels of support fail, it says that you're going to go down to the next level, whatever that might be and whatever it is that you're trading out there. If we take a look at the VIX index, let's go see what that is doing. The VIX index actually kind of moot today. It's trading out at 1567. So it's basically a sideways move that we've got inside the VIX. So that's not providing you and I with a whole heck of a lot of information out here. If we take a look at some of the indices, this is also going to give us some areas to pay attention to. So, okay, I'm glad I actually popped this chart open. So we were looking at the NASDAQ composite. We were taking a look at that price oscillator in relation to its zero line out here. And we were also immediately where my eyes went to was that the wide-ranging bar and gap up from October 2nd. But the good news is I've got multiple charts out here, and this says that the next area for price to actually move down to is about 48.11. Right at around 48.11 is the trend line. What I have is basically the trend line that the NASDAQ composite broke through. Now, that's the trend line coming off of its all-time highs from July 20th out here, and then basically using that September 17th swing point as my next touch point out there. So when you break a trend, this would also provide you and I with some really pertinent and important information about what the market wants to do. Coming back and testing the trend that's been broken, especially when that hasn't occurred here, is normal. Getting back inside the trend spells problems. It says, hey, I never really intended to break you, and and therefore it wants to resume. And that says, hey, it probably brings open that September 29th level out there like we had already spoken about. If we look at the S&P 500, see what the S&P 500 is doing at this moment. The S&P 500 is testing its trend line from July 20th. Now, remember, it actually made a slightly higher high back on May 20th by about $2 or so. But that's just simply a horizontal trend that we would have out there. That's really a consolidation inside that area. So we're really not going and taking a look at that. If you really wanted to take a look at what the S&P 500 has done, what I would do horizontally speaking would be taking a look at the low right around here from March the 11th. So that little red line going across my screen, to me, that's in essence, if you were to look at the horizontal consolidation area, it's really between about 2040 and 2133 or so. We're not having to deal with getting back inside that consolidation. Instead, we're looking at a natural and normal level of resistance. Now, inside the S&P 500, it has two of them. Breaking above these, just like we took a look at with AEM, breaking above this area would also be very strong inside of the market. So we've got a natural, what should be natural areas of resistance right around 2040, both diagonally and horizontally. That suggests price should move back. Now, where's price going to move back to? The first level to be looking at is probably in the 1998 area. So it's about another 25 points or so south of where we're at. You start breaking below the 1990 level, so another 8 points or so to the downside. What that's going to do is that's going to bring that October 2nd, October 5th gap area into play. So that is the S&P 500, and taking a look at what it is doing. We know that the Russell 2000 has been weak. Let's see what the Russell 2000 is doing. The Russell 2000 right now, there's two different trend lines that you and I have for this. The first trend line is the one off of the highs from June 23rd. That June 23rd swing point as high, as well as the July 16th swing point, is one trend. And it looked like, in this case here, the smaller trend inside of the Russells, July 16th high and that September 17th level, which we saw price really break above it. But take a look at those last 3 days. If the body of the candle is the essence of price, what do the bodies of those three candles tell you about after one heck of a nice day on the trading session of October 15th? It says it was tired. Now what the Russell 2000 is doing is coming back and testing that trend line one more time. Now, I don't know if it's going to hold that support. If it does, it does. If it doesn't and it fails, that would suggest the October 2nd level. We probably would learn more from the Russell 2000 if it breaks a trend line as to where the rest of the market wants to head to. But at this stage right now, it is up against support out there. So that takes care of the indices. Let's go move on over. So we've looked at gold, silver. We've looked at the market pretty extensively out here. Let's take a look at what do we want to look at next? We probably ought to look at some of the individual equities out here. I see a lot of things being posted here in Valiant Pharmaceuticals. VRX is the ticker symbol out here. And if we take a look at it, just absolutely getting crushed. When I say crushed, I do mean crushed. It's 79 million shares. That's a wide-ranging bar, to say the least. Now, this is a weekly chart that we're looking at. 79 million shares for the week. For the day, this thing has done 53 of those 79 million. Let's put this on a monthly basis out here to see how quickly. Look at that thing. Man, talk about volume off the high. So, Valiant Pharmaceuticals, where's this thing headed to? I don't know. The next stop is probably 56 bucks. 30 bucks lower than that. That thing has been taken to the woodshed. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're going over to the 10-minute chart here for the ES Mini. Remember, as price was moving down to those support levels, I had the one of my 10-minute charts up on the screen. I didn't get a clear picture of what was going on, but we have a clear picture now as I switch over to my Ninja Trader chart out here. We can see that, and this is a 10-minute chart, so use that for what it's worth to you. But what we can see here is at 150 earlier this morning, there was a spike higher inside of the ES Mini. Now, as it was, and it got up to the 2034. And as it got up to that 2034 level, you can see that price was moving higher with what? Less relative energy out there, less relative strength. Nice little bearish engulfing candle that ensued right after that. And what we can see is as we have gotten down to the slow out here from about 20 minutes ago, The price point out there being 2012.75. Price was also moving lower with less relative weakness out there. And instead of getting a bearish engulfing candle, we got a nice little piercing candle. That's a bullish reversal. And then the very next session here, as we came into 150, also added to that. So the first level of resistance inside the 10-minute is about to be tested. That looks like about 2019 is the level. If 2019 on a 10-minute basis, if that could be broken through, then you could anticipate price actually even get up to the 2024 level. So that's the areas to be watching. You also happen to have a seventh move to the downside there. That's that G count as we take a look at it. So now that's on the 10-minute basis. If you and I go take a look at the 120-minute basis out here, what you're going to see is that we should anticipate lower prices coming at us. Why? Because at the same time that 10-minute chart was making that seventh wave move and a price relative strength divergent pattern, we had the same thing that was occurring on the 120-minute time frame. That also followed up with a bearish reversal signal on the very next session. Now what we can see, we've got the bottom of its TAS market profile that is being tested out here. So, and the bulls are really lined up there. So that's the way that it looks. So look, you could even see a bounce to 2028 out there. Nothing would surprise me. Remember, these markets on all time frames, we can use these signals. They work the same way all the time out there. So we've got our parameters for the day to know what to be looking for. If we go make a quick again, the VIX index has basically done nada as we speak. It's just really a sideways move to actually just slightly lower out here. That doesn't mean that it's not revving up its engines, but it hasn't done a whole lot. So it says, plenty of liquidity, the reason why you would see or anticipate different bounces in the marketplace. If we look at the Euro Japanese yen, that hasn't sold off or anything. I had sold off from its high. We know this is really traveling inside a little wedgie pattern. Eventually, that wedgie will come to fruition, but it's nowhere near the cone of silence out here. So this currency pair could continue to move sideways for a while. So no real clue coming from that. I will say no real clue as you look at it like that. My clients know that there is a clue out there, and is the reason why we took certain actions inside of the market. Chipotle, let's go take a look at the Chipotle. That's down 51 bucks. That's off 7%. That gapped down below that breakout session out here, and in doing so, Chipotle created one of the largest island reversals, island tops out there that you can see. Now, Chipotle has made these islands before. That is one of the psycho characteristics of this equity. The last time that it made an island reversal, that was between the time period of January 8th all the way to February 3rd out there, so nearly a month. This one went on for the time period of July 22nd through today. Last time we had an island reversal, Chipotle went down to the price level of about $5.97. I don't see any reason for it to not do the same this time around as well. Folks, thanks for being here. Stay tuned. Our man David White's going to be up next. Have a wonderful Wednesday, and I look forward to seeing you on terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.